Imagine stepping through the front door of your very own home for the first time. You know, the sense of pride or security and excitement washing all over you. Buying your first home is a monumental milestone, but for many, it can seem like it's an unattainable dream. Now, in this video, we're going to cover a lot of the traditional programs. We're going to go over a couple of first-time home buyer programs for some conventional loans and go into some FHA and some government subsidized loans. When you look at USDA or VA, those are just programs that are a little bit different out there, and you want to look at some of our future videos that go into those in more specificity. But today we're just going to cover some of these traditional programs that really cover most first-time home buyers. So there are different levels of first-time home buyer as well. A lot of people are just assuming that it's just a one block and everybody fits into a first-time home buyer program. There's actually a couple different levels that kind of come into there. Now, the first level really applies to what they call as an area median income. If you're within a certain level of income when you're qualifying, and who we have for an applicant on that application, then we would look at additional incentives if you're below an area median income. There's a link right here where you can go check this out. Fannie Mae and Freddie Mac on their conventional loans have an area median income lookup tool, and that the link is right there. And what that does is you can go look at your particular area. You can go down into a county or maybe even down into a census tract of an area that you're looking for. And that's where you want to kind of go look at to see where your area median income is. Now, there are first-time home buyer programs that have no income limitations. So you could make $250,000 a year and still qualify for some of the first-time home buyer programs that are out there. And then there's government subsidized types of programs. And what that really means is that the government is going to put some additional subsidies or protection pieces in for investors, so they will allow more open parameters for getting into those types of loans. So let's just kind of start off with one of those first-time home buyer programs that goes over the area median income limits. What happens if you fall into this area median income? Now, that is if you're at that number or below that number, you can still qualify. You're going to get additional incentives that are in place. There's two conventional programs through Fannie Mae and Freddie Mac called Home Ready and Home Possible. Now, if you're below their area median income requirements, then there's going to be some additional incentives that come into play. Now, one of them is a lot of these traditional programs are unconventional, is that your first incentive is you only have to put down 3% of that purchase price. So, for example, if it was a $400,000 home, your minimum down payment at 3% would be $12,000. Now, the other incentives they put in there, because you're below this area median income, is that they're going to give you some reduced incentives for better interest rates. They're going to price that as if you were putting maybe 10 or 15% down. So it's going to be a nice incentive to where that you're going to get a lower interest rate. And they're also going to give you reduced mortgage insurance. So again, you're a first-time home buyer, you're within this area median income, they're going to also have a lower mortgage insurance factor that's placed in there. So try to keep that payment manageable. We're going to give you a lower rate and just try to give you more flexibility in those scenarios. Now, one of the things that you will have to do on that type of a program is that they will require that you complete a first-time home buyer course. Typically, you can do these online. May cost you about $75 to complete something of that nature. And those classes are really going to go through some good incentives for you as well, just to kind of let you know what some of the pros and cons to home ownership may be. And the last part on that is that they will allow on that area median income for the seller to pay up to 3% of that sales price towards your closing cost. So maybe you only have to come up with just your down payment, which could be gift funds, your own savings, or maybe even money from a 401k. Okay, so if you locked onto this video because you really want to find out what some of these first-time homebuyer programs will be, I would love it if you go in the comments below and tell me what is one of the most important incentives that you would have as a first-time homebuyer. Okay, next we're going to go into the no income limit. That means it doesn't matter how much money you make. If you have not had ownership interest in a home in the last 3 years, then you can still qualify for a first-time home buyer program on a conventional loan. Now, this conventional loan would be still a 3% down payment. So you can keep that cash out of pocket very nominal. You can also have the seller pay up to 3% towards your closing cost as well. So maybe you just have to come in with that down payment. Now this will price a little bit higher than the area median income because there's going to be a little bit additional risk in there with a lower down payment, and your mortgage insurance may be just slightly higher. But the nice thing is you can leverage a little bit of money to get into a nice piece of real estate for a little bit of money. Now, just one thing to remember: when you buy real estate, when that home appreciates, it appreciates at the full value of that home, not just the amount that you put in. That's why, buying real estate is a great incentive when we kind of come down to our investing and trying to build wealth. This is how we do that, through real estate. Now, the last program that we're going to get into is really the FHA, or the government subsidized program. Now, this is very similar to the conventional loan programs, where they will allow 3.5%. So 3.5% is your minimum down payment. And you can have non-occupant co-borrowers come in here and co-sign with you. If you have a family member that's mom and dad, or aunt and uncle, grandparent that wants to help you with that. These are becoming a lot more prevalent in today's market, because this first-time home buyer program is going to have a stronger market rate right now, and they have reduced mortgage insurance on this FHA program as well. Now, this is really becoming a vehicle that's really opening up a lot more options for those first-time home buyers than we've seen in years past, where FHA was just not as accessible because the market would not allow those types of programs to be accepted on contracts. So we're seeing a lot more of this come back in. Now, here's one of the downsides to an FHA loan. I want to put a link right here again. Now, they have just a smaller maximum loan amount than the conventional loans will. So they're not going to go as high on the loan limits as a conventional Fannie Mae or Freddie Mac loan will be. And if you go into that link, it'll show you can type in what state, what county you're in. It'll show you what your income limits are across a 1-unit, 2-unit, 3-unit, or 4-unit property. And the last piece, which is a little bit more of an incentive than the others, is there is no first-time homebuyer class requirement for the FHA loans. Now, I will just take a second to touch base on down payment assistance, or DPA programs. Now, these are definitely first-time homebuyer programs, and it's one of the items that gets a little confused with, hey, it's a first-time homebuyer program where I can just get all these incentives. And that's why we want to kind of go through that education. Down payment assistance programs have some very tight variables in there, and there's actually a lot more local variables that may come into play. There may be more down to cities or counties that will allow for different variables or different incentives with different grant programs that are in there. If you're interested in down payment assistance programs, hit me a comment below and let me know where you live, and I can give you a list of what's a down payment assistance program in your area. Now, there's one creative solution that we're seeing quite often. Now, today's market, with interest rates being higher and home prices being a little bit higher, we're seeing people who can qualify for those loans, but they just don't get into a comfort zone with what that new payment's going to be. And I'm a big believer that you live in the payment, not in the mortgage. But here's the creative solution. People are bringing in friends that they've had or been roommates with and renting out rooms to them to help them make those payments. And maybe even in some instances, we're seeing where they're paying less than they were paying a rent by renting a room or two of those out in their homes. So finding creative solutions is really a fun way to figure out how to get into that monumental milestone of purchasing your first home. Again, investing in real estate is something that's going to bring some benefit to you at the end. Renting has its flexibility points, and it's a little bit more versatile. Maybe it's even a little bit lower of a monthly payment, but every month that rent is due, and once that rent is paid, and then you have your 30 days to kind of stay in your place, but you're not really taking any incentive back out. By purchasing real estate, you get not only the investment of a principal and interest payment every month into that piece of property, but you're also having an asset that appreciates over time at the full value as well. It can help you with that milestone to the next home and just kind of keep you on that path to wealth creation.